I'm about to teach you a trade that you're going to be surprised is so effective in this video. Some of the best traders on the street employ this trade with their trading strategy. Exposure to how some of the elite traders profit so handsomely will be eye-opening for you. Sit back, take out your notebook and pen, and get ready to learn a very profitable trading strategy that will help you grow your trading account. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic One Good Trade and the Playbook. Click our subscribe button so you don't miss any of our trading videos that we're producing for the trading community. In this video, you're going to learn one of the most effective trade setups on the street. You're also going to learn one of the most effective trades by active traders on the street, a trade to exploit daily, a trade strategy to capitalize on these opportunities. There are multiple ways to capture this opportunity, and I'll walk through that. How traders can use a tweet to profit, and how to think through a trade like a pro. For those who want to learn strategies employed by some of the top traders on the street, watch this video. If you want to learn 3 more real-world strategies that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window, so don't worry, you're not going to lose this video. Just go ahead and do it now before you forget. You're going to learn more, and I'm hearing this from lots of traders reaching out to me on the street. You're going to learn more in a couple of hours from this trading workshop than from years of online education. The breaking news play. We're going to spend the next 20 minutes talking about this very powerful trade setup. Before we actually talk about this trade, I want to make an important point. Build a playbook. The second book that I wrote is called The Playbook. And it's not promotional in any way for you to go read the playbook, although I hear it's very good. I'm making a very important trading point for you and for you to grow your trading account. And I'm giving you a sneak peek into how we do things here at our professional prop desk in New York City. We are thinking about trading setups. We are thinking about trading setups that we place in our playbook. Our playbook is our trading business. So we're not sitting around thinking about whether or not General Motors should be higher or lower. We're not sitting around thinking about whether Apple shouldn't have sold off as much as it has recently or should be higher. We're not sitting around thinking about whether or not Facebook has more downside risk because of government regulation from its present point. We're not sitting around predicting whether or not the market's going to go up or down, whether SPYs, Qs, IWM, Google, Amazon, Netflix are going to go up or down. That's not what we're doing. We're sitting around looking for real good risk-reward plays and trading setups in our playbook. These setups have a title. There's a strategy for how you trade them. There are variables that go into developing that strategy. There are variables necessary for a trade. You're archiving these setups for your playbook, so you get better at them. You're measuring them. You're keeping really good trading stats of each of these very specific types of trades. You're placing your best trades into your playbook. You're building from measured success for you. You're building from measured success for you. Take a pen out and write that down. That's your business. Your business is what you've measured that you have traded successfully, and you're going to do it more often and bigger. So here's an example of a trade strategy for a type of breaking news play. This is not every breaking news play. This is not me telling you this is the very way that you should trade a breaking news play. This is one subset of a breaking news play. This is one type of trade that can work in the marketplace, that does work for traders in the marketplace, that we're exposing you to. The variables of this particular trade, the variables that I'm looking for to make this particular trade are substantial news. Substantial news that's unexpected and not baked into the price. I want to be reacting quickly to the substantial and unexpected news. I want to fight for price. That means I want to get the stock at a really good price. To get this breaking news, you need to be connected to all the important news feeds. Trade the News, Briefing.com, Reuters are some. There are others. Bloomberg is the gold standard for large players for the specific trade of a breaking news play. Good to know how stocks are connected for sympathy plays. So if you get a breaking news play in one stock, there may be 3 or 4 others that are also going to move based on the news on this one stock. What news will drive a stock? You need to know. You need to be studying. I'm going to exit this particular trade when momentum slows. And to keep you most interested, this is a trade mastered by the top return on investment active traders on the street. I like to get a big picture view of the setups that I'm attacking. In this case, we're going to take a look at General Motors, a breaking news set in General Motors, which is not a particularly very active high ATR stock, ATR meaning average true range. It doesn't move as much as lots of other stocks in the marketplace. So the fact that we have this as an example is means the news was more significant. But we're taking a look, and we want to know what our yearly chart looks like of General Motors, and we get that picture. We want to take a look at our 30-day and our 30-minute and get a picture of, hey, where we're at in General Motors overall. You can see we're trading very nicely over the last 30 days and breaking above prior resistance. I'm getting this picture in my mind of where we're at. 5-day, 5-minute. We're seeing a breakout, a large breakout to the upside, which is what we're going to talk about here today. It's a lot of fun to talk about. This is actually a really interesting trade. I want to know, before I trade a stock, certain facts about the company. For example, I want to know the volume. I want to know the relative volume in the stock. Relative volume is how it's trading in relation to how it trades on other days. So in this case, RVOL is almost 2, so we're getting twice the amount of volume in this on this particular day we're going to talk about than normal. And by the way, in a time period where volume is what? Compressed. So that high RVOL tells us the stock's in play. ATR in the stock's kind of low, 1.18. I like to trade stocks that have an RVOL of over 0.8. If a stock has an ATR of less than 0.8, I'm probably not going to trade it. Short interest is very low. We like to know what the short interest is, because if the short interest is really high, the stock can move explosively to the upside more than other stocks. There are more natural buyers. The more people short a particular name, the more natural buyers there can be in a particular name. When you're just starting, if the short interest is above 20, be careful. If it's above 30, probably not a good idea to trade it. The institutional ownership is a key fact to know before trading a stock. It tells us how likely the people who own it are to get rid of it. The float is 1.2 billion, huge, large cap stock. These set the context for how volatile I expect the stock to be, helps me to determine how much the stock can move during the day that I'm trading it. or during the days if I'm making a swing trade that I'm trading it. And I want to be consistent about knowing this information because then I'm building my feel for the marketplace. But if you're not consistently looking at very specific facts every time you make a trade, that feel you have for when to exit and when to enter can't be as strong. The news in this particular stock on day one, shares surged after being temporarily halted. GM announces a restructuring program, which includes shutting down assembly plants and cutting jobs. So they're shutting down plants and they're cutting jobs. GM said no further products would be allocated to the Detroit assembly, the assembly in Warren, Ohio, and the assembly in Ontario, Canada. GM would also cut jobs at the Baltimore operations facility in Maryland and at the Warren transmission operations facility in Michigan. Following the announcement, the stock soared, as these actions would increase long-term profit and cash generation potentially. You might say, "Oh my God, they're cutting plants. Well, how could the stock go up? Shouldn't the stock go down? Aren't they signaling that their business practice, their business prospects going forward are lessened?" Well, the street actually will view this temporarily at the beginning as them able to run their business more efficiently, them able to potentially cut some fat, them able to perhaps earn a larger margin on their business. And so it gets a little counterintuitive for those of you who are students of economics and sitting there saying, well, how could the stock go up? I understand your trepidation. We're students of what stocks do after news comes out, not how the market should judge the news. It's the patterns that follow after. So that day, President Trump told White House reporters that he spoke with GM's chief, saying that he was unhappy with the company's restructuring and expects GM to put something else in Ohio. Timestamp, 2:46 p.m., day one, we get that factoid. We take a look at GM on day one, surges. Halted at 10:19 to 10:40 for pending news. The restructuring news is released, and GM has a 5.5% move to the upside. Big move in this large cap stock. And then the Trump comment that we hear at 246, get that 246, came out, but on this day one, the market didn't react to that. We move into day two. How is GM going to trade? So one of the challenges presently for active traders has been the market creating a direction and then the market failing to follow through in that direction based upon information that's coming out from the White House. So most particular, the trade war between the U.S. and China has been causing the market to go up or down based on the news flow that's coming out of the White House. So the White House will say, yeah, it's really not that likely that we're going to cut a deal with China on trade. We're more likely to slap these tariffs, move forward in that vein, and the market generally has reacted negatively. And then the market will start to, you think, trend to the downside. And then all of a sudden, from the White House will come news that we're making progress with China. We've got talks lined up. Maybe Larry Kudlow will come out and do an interview and say, I like the progress we're making. We're making significant progress in our talks with China, and the market will rebound. And so you've had to stay real close to your news feeds. You've had to stay glued to the news that's coming out of the White House, which, if you're not a nimble trader, can be a little bit frustrating, particularly when you're in the money in a position and then new news comes out and it gets disrupted. So on this particular day, on this day 2, Trump comes out and says, very disappointed with General Motors and their CEO for closing plants in Ohio, Michigan, Maryland. Nothing being closed in Mexico and China. The U.S. saved General Motors, and this is the thanks that we get. We're now looking at cutting all GM subsidies, including for electric cars. General Motors made a big China bet years ago when they built plants there and in Mexico. Don't think that bet is going to pay off. I'm here to protect American workers. The key comment there is we're now looking at cutting all GM subsidies. So GM now is in jeopardy of seeing less money coming to them from the government that had been anticipated. So this news was not baked into the price of GM yet. This news is significant. Remember, I want to think about trades as with variables in them. So I want substantial news. I want it to be unexpected. I don't want it to be baked into the price. And this is an example of a breaking news tweet that fits that variable, which I'm looking for to make a breaking news trade. I'm not sitting there saying, I predict that Trump is going to come out and speak negatively about GM for doing this. I'm not sitting there predicting that, GM is your bet for driverless cars. I want to be exposed to that. The market is going to use this sell-off as an opportunity to buy more. I'm not doing that. I am reacting to setups that have variables that I trade well. That make sense? Okay. So we're going to talk about this, and later in the day, after Trump tweets, then GM tweets. Again, this can be, you got to be close to the news feeds, and it can be a little bit frustrating if when Trump tweets that they're thinking of cutting GM subsidies, you get short and you're looking to sort of hold that for a swing trade, and you're in the money, and then GM comes out and tweets, we're committed to maintaining a strong manufacturing presence in the U.S. Many of the U.S. workers impacted by our actions will have the opportunity to support new growing areas. So GM's saying, hey, Mr. Trump, we're committed to the U.S. And it can be frustrating because that's a counter tweet and meant to appease the president and any sort of backlash that he may ask his players to furnish on GM. So how does that work in terms of trading? Good question. So at 2:06, Trump tweets his disappointment in GM on Twitter. That's a breaking news trade opportunity. And again, there's different trades here. So I'm going to talk about a fast trade. There are swing trades you can make with this. Perhaps I'll save that for another episode. And it's not important that you're a swing trader or not talking about a swing trade, because really the big takeaway from this is how to think through trades like a professional trader and how to set up your trades with variables, specific variables, to make quality trades so that you can do that for yourself. That's the most important thing. So I'm talking about this one particular fast trade. And, so for this trade, I'm going to want to react quickly. I'm going to want to fight for price, and I'm going to want to be taking this off when the momentum is slowing. So I'm going to be reacting. You can see the arrow right here. I'm going to be setting my stop above here, or maybe above VWAP. All right, so I'm going to react because there's breaking news. This is negative news that is significant and unexpected to GM. It's not baked into the price. I've got a good risk reward to hit it here, set my stop above the last consolidation area or above VWAP, depending on the type of trade you're making and type of trader you are. And then I want to I want to take it off when it starts to slow. So this is trade decision 1. Or certainly here, it's slowing down. For more time, it's really not making lows. You get a double low right here. So it's not going down anymore. And so again, I want to go back to the variables. You don't have to make every penny out of trade. You're making trades that have variables. Substantial news, unexpected, I'm reacting quickly, I'm fighting for price, I'm exiting when the momentum slows. Connected to my news feeds, that's the trade that I'm making. You could call it, anyway, it's a fast moving trade. There's certainly a swing trade you can make. You can swing it from here and look for a bigger down move and then cover it here when this next news announcement comes out. You can certainly do that. But again, I'm focusing on the type of trade that's easiest for you guys to be making when you're developing. And then what happens at 332? So we hit it, we cover it, we're hanging out, we're doing something else, and then we get another tweet. We get a positive tweet. We get a positive tweet that's unexpected, that's significant. Again, we're making trades with variables, and we're getting the mirror image. News substantial, news that's unexpected and not baked into the price. I want to react quickly. Connected to all the news feeds, I exit when the momentum slows. So we have the mirror image of that in this potential setup. All right, so at 332, GM comes out with its announcement. Bam. Okay, we buy it and we sell it into the up move. And this is a breaking news trade. There's going to be, remember, this is a large cap stock, and so this is a move of 80 cents here. That's a big move in GM. You know, the ATR is $1.20. So if the ATR was higher, you would have gotten a larger dollar move. And then, you know, we get another mirror image tweet right here, and the stock goes up a good 50 cents, which relative to our ATR, it's still a big move. Still a big move. Very strong trade to have in your playbook. The most successful, active traders who have the best return on investment employ this strategy. And so we see this trade happen in lots of different sectors all the time. And I wanted to just give you exposure to it for you guys to be thinking about it and working on it. So what you learned today is one of the most effective trades by active traders on the street. This is a trade you can exploit daily. It's a strategy to capitalize on these opportunities. So we don't want to just say I trade breaking news setups. We want to have our strategy mapped out with the variables that we're looking for and our strategy for trading it. We want to have that mapped out already. We want to do that for all of our trades. There are multiple ways to capture this opportunity. So look, admittedly, I chose a way to handle this trade that's best for new and developing traders. You can certainly take the principle of these trades and turn it into a swing trade. Now, you would have different variables for it, and you'd have a different trade strategy for how you attacked it, and your win rate would be a little bit lower. But when you won, you'd make more money. And that's a perfectly acceptable way to trade this opportunity for your playbook. How traders can use a tweet to profit. And I know I'm getting a lot of emails in my inbox about traders who are frustrated with the market kind of going up and down based on news that's kind of coming out that they can't control. And, you know, look, you could be frustrated by that, or you could see it as an opportunity. You could adjust how you're trading, shorten your time frame, and be more nimble, and be able to attack and take advantage of more opportunities. The market is not there to trade the way that you want it to trade. One of the more dangerous things that you can say as a trader is, well, the market isn't reacting the way that I need it to react. My strategy isn't working well in this type of market. Our job is to pull money out of markets in present market conditions. How we want the market to trade is not the way the market does trade. And I think saying and expecting the market to react the way that you want it to is not going to produce it's not going to produce the best mindset that you can have to be a consistent, large, sustaining trader. And I've seen a lot of guys who can make a lot of money in certain type of markets who can in others and have to go on and do other things. I want you guys to be large, 7-figure, sustaining, profitable traders with lots of different plays in your playbook to help you attack varying markets. That's where we want to get to. And in our desk, we've been fortunate to develop quite a few 7-figure traders, and I'm fortunate enough to work with the guys internally and then outside of the firm who are at that level as well. And they have a very large playbook. They're able to use different setups in different markets as needed. And so think about that. My job is to share with you what's working, who's successful, and point you in the direction of effective best practices and effective techniques so you can grow your business. And as always, my goal in creating these videos is for you to learn how to think through a trade like a pro. That's the greatest reward for this. So I hope you get exposed to this idea. I hope you think about employing it in your trading that's best for you. I hope you tweak it and make it better and build from it and measure it. And it adds some valuable P&L to your trading, because it's a hugely effective technique used by some of the best ROI traders who are active on the street. Hey, just go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for you and the trading community. Please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train well and trade well.